Okay, my dear students, you have probably heard many times about the idea to go public to buy or sell stocks. What does it mean and how it works? A company which goes on public market has three different alternatives. IPO, initial public offering, okay, rights offering, new stocks to the existing stockholders, or private placement, new stocks go to one or to a group of investors. The firm must obtain approval of current shareholders and potentially hire an arranger, investment banker, or underwriter to underwrite the offering or the placement. So this is interesting to know. The investment banker is basically responsible for promoting the stock and selling the shares. Okay. Well, as we move ahead, we can now define what we call the prospectus. You probably heard about it, and explain how it works. Let's start with a few definitions. So the company must file a registration statement with the Security Exchange Commission, SEC. Then part of the registration statement is what we call prospectus, which describes the key aspects of the issue, the issuer and its management and financial position. Okay. While you are waiting for approval from the Security Exchange Commission, okay, regulatory body, prospective investors can review the firm's what we call red herring. Red herring, this is a kind of the preliminary prospectus while you are waiting for the final one. After the IPO is complete, the company must observe what we call a quiet period, which restricts the company statements. So you have to respect that. It depends on the country and legislation. As we move forward, you can notice on this slide an illustrative example of a prospectus. So you can see that it is a kind of the formal document required by and filled by the company, and you need the approval from the Securities and Exchange Commission that provides you details about the investment offering to the public. Some basic data available to investors, you can find it observable here, such as the issuer, the name of the company issuing the stocks, number of the stocks to be issued, classes of the stocks, range prices of the stocks, a minimum, maximum, arrangers, who are arrangers or co-arrangers, such as here Morgan Stanley, Goldman Sachs, and many other useful information for investors. Okay, let me now explain the role of arrangers in public offering. Okay, let's start with a few definitions here. How does it work basically? So basically you have arranger, who is arranger, in most of the cases investment banker, and the company promotes to the so arranger promote the company on the capital markets through what we call a road show. What is road show? It's when you go in different places, different cities, countries, to present to the investors your issuing. You go with the bankers, investment bankers, your arrangers, co-arrangers, all the management board, sometimes with the auditors, and you present the risks of the company, investments, where you will use the money, when you will pay the dividends, accounting statements are presented there. So many interesting and useful information to the money providers, to the investors. Of course, they have prospectus, but it is important that you present on that roadshow your company. In most of the cases, it happens in very expensive hotels. I have been on some of them, and I can tell you it's quite interesting. It enables the potential investors well to understand the risks and to define the initial offering prices there. So once the arrangers define the terms, Security Exchange Commission, regulatory agency, approves or rejects the offer. So this is important to keep in mind.